US all sports, and in fact we had a phenomenal bearish momentum happened during the New York session yesterday, as we were able to scoop in over 800 pips from multiple entries on this particular asset. Now, talking about this, let's look at what is going on in this market from a fundamental perspective, and why is it that we experienced that massive bearish momentum to the downside. Well, yesterday we had a latest and unexpected decision by the OPEC Plus to postpone their meeting on production cuts, which was supposed to be happening from November 25 to November 26 to now it has been postponed to November 30. Now, this development raised concerns about global crude oil supplies and could potentially drive oil prices further to the downside. And as a result of this development, we saw how the market reacted to this postponement, leading to this strong bearish momentum to the downside. Then in addition to that, I told you yesterday about the recent increase in US stockpile, which rose to a phenomenal 9 million barrels for last week, as against the upper week, which came in at 3 point something million. That is another phenomenal growth in stockpile, which of course gives us an insight into the increase in supply of US oil in the market. And of course, we know that when there is a high supply, price tends to drop to the downside. And everything we're seeing on the chart is in alignment with what is happening behind the scenes. Now, let's run through the current market structure to see what really happened, and for the sake of those who missed out on our earlier session, to be on the same page with us. So at the beginning of this week, we noticed here how price action was initially confined within a range that is between the $76.80 level and the $76 area, which happens to be our key level for the week. Don't worry, we are going to be talking about that in a moment. And considering the fact that price action was within a range, we were waiting for either the breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And right here during our live session on Monday, we capitalized on the breakout of the resistance line right here to incite that bullish momentum. And in fact, we rode it all the way into that level at the $78.40 area, giving us over 160 pips in profit on that single move. And you know how we do it in this community. When price action moves significantly well in our favor, we move our stop losses to secure our positions, and we did that before the bearish momentum happened. Then during our live session on Tuesday, we saw our price retraced back into a range, and we were of the opinion that price action may likely continue the uptrend as we position ourselves just exactly above the $77.50 area to capitalize on the bullish move. Now, during our live session yesterday, I told us all that we want to be moving all stop losses, secure the current buy positions, as there are chances that sellers could come in, especially after observing the increase in US stockpile during yesterday's trading session. So we did move our stop losses accordingly, and I did told you that if price action does not continue to the upside and instead breaks down the $71.10 level, we will be joining a bearish momentum to the downside. And this was exactly what happened a couple of hours into the New York session yesterday, as we capitalized on that bearish move, riding it all the way to the downside. And remember that we had multiple entries marked out on our chart to maximize that potential of the bearish move. So we had levels at the $76.80 area. We also added one more at the $76 level to join the bearish momentum to the downside. And for those of you who capitalize on this opportunity, well done, and kudos to you for being on standby to capture this move, and by now you must have been out of all sell positions, as you must have moved your stop losses accordingly, like we always do when price moves very well in our favor. Now, in anticipation of the New York session today, how do we intend to capitalize on the next move? What are the chances that price will continue to the downside, or are there chances that price will climb up again? Well, before we can have a better perspective into what is going on here, I would like us to have a quick review of the higher time frame. Let's refresh our memories as to what we saw at the beginning of the week that led to the decisions we have made so far. And to do that, we will be scaling back up into the 4 hours time frame, where we were able to identify a simple setup that guided our decisions at the beginning of the week. So right now we are at the 4 hours time frame, and remember that at the beginning of the week we took into consideration the nature of price action in the last 3 to 4 weeks, and what we have here was a beautiful descending channel. After connecting the series of lower highs, we have the resistant line of this descending channel, and after we connected the series of lower lows, we have the support line of that descending channel. And usually when we have price within a range like this, we expect that price will continue to the downside. However, something interesting happened at the beginning of this week when we saw price break out both of our key level and the resistance line of that descending channel to incite an uptrend scenario. Now, you know that whenever we see price break out of a structure like this from a technical standpoint, we do expect that price at some point will come back and retest the structure in anticipation of another wave of bullish momentum. And of course, if you see what happened here in the last 24 hours, we saw our price came back into the resistance line of that descending channel. And look at what happened when price tested that area. We saw an engulfing bullish candle spring out from that area, taking out all the losses from yesterday and bringing price back above our key level for this week. And you know how we use our key level. As long as price remains above our key level, we want to be looking out for patterns and structures that supports the idea of buying this asset. Now, the question we have in our minds right now going into the New York session is, will this retest of structure incite new waves of bullish momentum to the upside, or are we likely going to be seeing price drop further to the downside? And in fact, I will feel comfortable selling from this from a long-term perspective only if price action will break down this $75 area. So for me to sell actually at this point, I want to see price drop below the $75 area. But as long as price remains above the 76, I want to be looking out for buying opportunities. Now, with this information we have on the higher time frame, I think we all have a better perspective from a technical standpoint what is really going on in this market. And don't forget that today being the Thanksgiving Day, the US markets is going to be due to the public holiday, the observation of the public holiday, the market is going to be closed for today, which might limit whatever traction the market wants to push for today. So scaling back down into the 1 hour time frame, let's look at what is really going on around here. Now, what I did this morning while trying to profile a decision today is to look at what really happened during the Asian session. Now, during the Asian session, we saw our price was confined within a range that is between the $76.80 level and the $76 area to emphasize the level of indecision in this market at this point. Now, one interesting thing about this range here is how this range was where the price action started this week. Remember, we saw price fall within this range at the beginning of the week, and right now price action is back into that range just right above our key level for this week. Now, this tells us a lot of how important and crucial the current juncture is at this point in time. So what we want to be doing now as technical traders is to exercise patience and wait to see how the market is going to be reacting to the zone. Personally, I want to be looking out for buying opportunity, of course, based on what we saw on the higher time frame, where I have a buy stop order sitting above the $76.80 area to capitalize on that uptrend move. And if price continues to climb up, a breakout of the $77.10 level, the $77.95 area, and of course the $78.40 level, which happens to be the highest level for this week, will be what we will be breakout of these levels will be what we will be looking out for to buy the US oil spot today. So personally, I want to maintain a bullish bias on the US oil spot for today. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers could come in at any point in time. And remember, I showed you something on the 4 hours time frame where I said I would love to only sell if price action will break down the $75 level. Now, I wouldn't want to be selling on unless price breaks down the 75 level, as you will see right here. So I do want to be marking out that structure right here. So we mark this $175 area. However, if we look at the distance between where price action is right now and that $75 area, you will see that we have a whooping 130 pips thereabouts. So are we going to allow 130 pips to happen before we can start considering selling? Of course not. So what I'm going to be doing here is to see how the market is going to be reacting to this key level at the $76 area. Now, if a breakdown retest of structure happens, which reveals potentials of selling opportunities like lower lows and lower highs on our lower time frame, then I want to start considering selling. And please note that while we sell, we want to ensure that we are on standby to move our stop losses accordingly to secure the current sell positions. And if price continues to drop, then a final breakdown of the $75 area will finally welcome a more selling opportunity, giving us more confidence to add more sell positions. And if price continues to drop and it breaks down that lowest point for this week at the $74 area, then we are likely going to be seeing a massive sell-off to the downside. So this is how we are going to be managing our positions for today on the US oil spot. Let's see how the market will play out. Like I said earlier, I'm holding on to a bullish bias here, waiting for the breakout of the $76.80 level. But if we see signs that price wants to continue to the downside and we begin to see series of lower lows and lower highs below the $76 area, we can actually risk some selling opportunities while we look out for the breakdown of the 75 and 74 level to now feel confident adding more sell positions to our existing trade. So these are my views on the US oil spot. It's a very, very simple setup, as our center of focus for this morning is going to be between the $76.80 level and the $76 area. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So let's see how this will play out. And if you have any questions whatsoever, feel free to let me know in the comment section below. I will be taking the next 10 to 15 seconds off as usual to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today.